Very good morning. Let us discuss with the recommendation comparison. As a common person should know about what is my need to invest, and I need a bit more detail about this investment plan and how this investment plan makes me to get more and more return. So, starting from the some of the questions I want to discuss about some of the questions like uh, indication or indicates how much money can be generated per unit of mutual fund in case of a scheme is liquidated. So always net asset value indicates how much money can be generated. Then we can discuss about each mutual fund scheme must have a stated investment objective. State whether they are true. Yes, 100% they are true. Which of the following the advantage of mutual fund is an economic of scale or customized portfolio or convenience to buy stock or bond directly from the mutual fund. Then which among the following category must fund have a fixed maturity date? That is always obviously it's a close-end date. So there are different types of objectives I should know. I can recommend or to compare between one investment goal to another investment goal. So I need some of the bit more investment goal with the risk tolerance under this chapter. Let us discuss with the recommendation comparison about some of the mutual fund schemes and how this investments will yield a return. What we discussed in the previous class about different types of risk attached, different classification of mutual funds, beneficial of this mutual fund, and various classifications. So if you see this slide, based on this slide, investment goal are looking for capital growth, legal income, tax saving, wealth preservation. Yes, I may look for capital growth, regular income, tax saving, wealth preservation. When I talk about investment goal, I need to look into everything, every investment plan as a part of investment goal. Then risk tolerance. Would you describe your risk averse, moderate, aggressive? Yes, I can describe about risk might be described myself in what type of a risk tolerance I can see, whether moderate or aggressive. No one will go for risk aggressive. Always are moderated, and I just want to see that maximum return, a minimum risk attached. Then coming to the investment horizon, how long do you plan to stay invested? Example, short term 3 years, medium 3 to 5 years, long term 5 years. Obviously, under investment horizon, I can see here investing in different classification with the max to max long term, that is 5 years. And geographical preferences, do you want to invest in the local market or international market or mix? I might prefer which is more profitable, which has a less risk, might be the local market or international market, but might prefer with the less risk or less profit with the local market, high risk with the international with the high profit. And any specific needs here, example like ethical investment, ESG funds, sector specific interests like tech and healthcare, or the low cost option. Specific funds I might be depend with the situation, like the present situation talks about healthcare, present situation talks about environmental related funds where will can be growth taking place in the future days. So this is one of the objectives about recommendation comparing to rest of the investment plan. The next slide talks about based on the asset classification. If you see, uh, there are equity fund, there are debt fund, there are money market funds, growth fund, income fund, which will yield. Now, when we see that based on the asset classification, equity fund description investing in the stock for the long-term growth. The previous slide I have shown the comparison of the recommendation. The recommendation from as an individual, my recommendation to investing in where exactly what type of investment is needed. Whether you're looking into safer side, you're investing in the local market, international market, or the kind of a growth fund, or in form of diversified funds, or in form of long-term, short-term, or in form of a risk yielding funds or return yield funds. So all these are classified compared between one fund to another fund based on the maturity period. So That's why I said open-ended has a open market at any time, and they can buy and sell at any time with the day-to-day transaction. But when it's come for close-ended, which has a fixed income with the maturity period. So equity fund investing in the stocks for the long-term growth. An example like this, what I shown, the debt funds again investing in the bond, government security, fixed income instrument for stability. Then I give an example funds like gilt fund, funds, corporate fund which has a huge rated funds. Then debt funds like investing in the bond, government security, fixed income instrument for stability. When we talk about stability, you get a fixed rate of return. In future long run, you might be seeing that there is a maturity for every government securities that you can keep this investment for how long with number of tenure with the rate of return which is stable in nature. So there are also examples same gilt fund and the corporate funds. Then you have a money market funds. You have under money market fund you have a focus on the short-term debt instrument for liquidity, treasury bills, right? Then money market funds again focus on the short-term debt instruments for liquidity in form of treasury bill funds. Then based on the objective, you have a growth fund here aim for capital appreciation, especially blue chip funds, right? See, when we talks about capital appreciation, people think that I may invest now and I just compensate that investment capital what have been invested in the market and get appreciation in the long run. So today's investment, which is investment will create wealth for tomorrow. So this is how it classified. Then income funds provide regular income through fixed income. So you are investing, example, they get monthly income. So you are investing in one particular fund, and that funds are created large drastically about how investments are multiplied and converted into monthly. So one fixed rate of income is divided into monthly. It depends on how you uh, classify your regular income with what type of objectives. Coming to the next slide here, based on the risk profile, there are low risk funds focus on preserving capital with a stable but lower return. Money market funds short term or long term debt. Right. Now this is what I've been explained very clearly in the previous class about classification of funds based on the risk profile. Here I have said about risk profile. Investing in equity has the highest risk, long term return. If you wait, then 100% highest return too. Investment in debt, less risk because it will yield fixed return, but you can expect in the short-term duration too. So here based on the risk profile, low risk funds are medium risk funds and high risk funds. Focus on preserving capital with the medium risk, high risk, and money market also medium and high risk. Based on the style of investment, what you do, where actively managed funds are there, passively managed funds are there. Fund manager actively select and manage investment, passively managed funds. Most mutual funds are non-index funds, are not into the market link. Then you have specialized funds, which have been explained to you. In specialized funds, there are international global funds. International funds focus on what trends. Then you have a fund of funds. There also I give example. Fund in form of a variety, a combination of all funds, debt and equity. In equity, what type of equities? In debt, what type of debts? That's why equity is a ownership fund. So somebody has invested in form of equity and expecting return. Debt in form of money market instruments where bonds, treasury bills, government security, or many type of a credit rating agencies are given very clear for financial institution to give credit. So here debt is a different component. Then there is a ratio I said about how low risk profile should be high profile, comparing between high and low. ESG funds I said about environmental related stocks, right? And I give an example about environmental related stocks like You have a electronic component today, EV related, hybrid stocks are there. You have a hydro related or many other uh, environmentally concern related stocks are available. So people just invest where low risk are there, but return also into average moderate in this spot. So these are the slides have been shown to you as a classification. Remaining will see in the next.